Hey there, everybody. Thomas with Basecamp Trading. It is Monday, June 15th, and we're going to take a look here at the stock market, talk a little bit about what's going on here. So this is the S&P on a daily basis, and you can see as of right now, we're spiking back up above that 3,000 level. After initially being down quite a bit over the night session, it's turned back around and had a really big recovery today. Now, one of the things that is driving this is the Fed just made an announcement here just a few minutes ago, at about 2 o'clock, that they're going to switch to directly buying corporate bonds instead of ETFs. And part of this is probably because they were being front run on their ETF purchases, but it also gives them more flexibility on what to buy, when to buy it. But they're basically just pumping money and sticking it in the market. And one thing I will say is you got to be careful with this because it's kind of like a house of cards. They keep pushing money into the market. That's what's propping the market up. They can't do it forever. All right, so caution about that. Now, with that being said, let's take a look at our trend here because the daily trend is one of the things we always want to pay attention to. So we are still technically in an uptrend because we're still higher high pivots and higher low pivots. Okay, so our dailies are looking like we're putting in another higher low here. So if the daily trend is going to continue and this is going to end up being a higher low pivot, we would expect to see the S&P go all the way back up and hit a new higher high. Now, the thing that you want to be careful of, and one of the things I'm really paying attention to here, our daily momentum has just tanked here recently. So by the time we get back, if we do over the next couple of days, get back up to that 3,200 level, I would not be surprised at all to see the indices have a bearish divergence. All right, so we want to be really careful there with that daily bearish divergence. All right. By the time it gets back up there, we're probably going to have weaker momentum, and that will typically lead to at least a period of consolidation, if not a full-blown sell-off. So that's what I'll be watching. This is the most downside strength we've had for a while since the down move back in March. So be careful. Wouldn't be surprised to see this keep on bouncing some more now that the Fed just came out and said they're going to pump more money into the market. However, once we get back up near the highs, big red flag, be watching for the bearish momentum, because if that triggers, then I would look for a bigger down move here. But that is going to be about it for today, everybody. I will see you all bright and early in the trading room tomorrow morning. And until next time, everyone, happy trading.